Extra, extra, read all about it. Inflation came in cooler than expected today, which is really nice to see. So let's go over the numbers. Now, we have core CPI and regular CPI inflation. If you don't know what CPI inflation is, this is the measurement of the rise in the cost of goods that we see at the grocery store, that we see at the gas pump. It's what people experience us every day in our lives, right? So this is the most meaningful to us. It is not the most meaningful to the Fed, but it is the second most important. Now, core CPI inflation is the measurement of the cost of goods minus food and energy. It is the less volatile parts of the market. And inflation for month-over-month growth came in at 0.2% increase, where it was forecasted to come in at 0.3% and cooled even from the previous month of also 0.3%. Core CPI year-over-year's growth from this September compared to last September's also came in cooler at 3% versus the expectations of 3.1%, and the previous reading also at 3.1%. Year-over-year, core CPI inflation is cooling. And then if we add in the cost of food and energy, month over month came in at 0.3%, beat the expectations of 0.4% and the previous month of 0.4%. And looking at it annually, it was an increase from the last reading, but it is a decrease and came in cooler than we had expected. With this being the only data that we're getting out of the government while it's shut down, I imagine this will have a positive impact on markets, despite markets not reacting to inflation data recently, simply because this is the only data they have to react to. So overall, hey, this is good news for both the economy and also rate cuts.